A little couple bips off of my expected closing price, but not bad. And below weekly gamma neutral, which is light bear fun range. Cobra, it's okay. We'll talk to Avivs. Maybe he can get your back. Looked like he was going for that one anyway, so he might be willing to take one for the team. Also, congratulations on your puts. I'll have Farmville reach out to you via DMs. Anyway, yeah, so fell back into trend, but didn't break trend here on ES. We might see continued downside overnight and an uptick in volatility. That's what I'd at least expect as the market maker hedge kind of falls off a bit in this range. And we're seeing most of this downside with a failure in breadth, which is kind of spicy. That's definitely what we want to see on our boy IWM here, which closed once again with charm negative. So that looks good for tomorrow. Commodities up a little bit today. Energy really floating a big chunk of the SPX today. Crude up 1.15%. And we also have a little bit of stuff going on with gold and silver, but not too much. And the dollar was kind of weak today. So I'm surprised we got that much of a drop at all, right? And yields down, not substantially, but down a bit. So we're still getting some of that risk off from Europe. Yeah, so dollar flat, yields pretty flat too. Correlation breaking down pretty rapidly though, right? We got 3 month correlation breaking down at breakneck speeds, and we do have 1 month correlation starting to break down as well. And so the shorter dated dispersion positioning that's propping things up is giving way to a lot of longer term dispersion falling off, which is bearish. That's bearish. Forward yield on volatility, although still very suppressed, is climbing, ending the day at negative 6.5 from the day's low at negative 13. We're definitely getting a little bit of tightening there, but the yield curve isn't inverting too much. It's staying pretty flat. If this also starts to invert and we see a jump in yields, the rate at which the forward convexity of volatility moves positive will increase. And we're not seeing much of a change in total leverage on the Japanese carry trade, although it is still very close to all-time highs. So there may just not be a lot of leverage there, right? Bond volatility is still staying elevated, but now 3 month correlation is starting to catch up with it. It wasn't before, but we are starting to see that catch up. Skew still doesn't look like, I mean, this is Friday, but it still doesn't look like there's sufficient tail risk hedging for at least what the market's indicating. And this could also be thrown off by excessive amounts of call selling, which we may be seeing above Vega neutral. For participants that understand what the proximity to Vega neutral and Gamma Max means, this presents an excellent opportunity for selling calls out of the money, right? A little bit of breadth did pick up last week on Friday with 55.26% of the S&P trading over its 20-day average. That's definitely gone back down today. We're probably sub 50% once again. I think RSP was only up 8 points today, so very very small move in RSP, and most of that immediately lost in after hours trading. So we are starting to see a little bit of a failure in breadth, and we also saw Dow and Russell decline today as well. Which, and most of this move to the upside has not been supported by the majority of the S&P 500, right? If you look at like the 493, it's been declining as the market's been rising, which is not a good look. So first day close, and we still have positive correlation on the weekly cash VIX and VIX futures contract in front. This represents a substantial change from the negative correlation that we have had since November. And we should start to see more demand for volatility, which should push this correlation more and more positive. Very exciting stuff. Fed funds futures still pricing in just a little bit over one rate cut for the rest of the year. So no real changes there. I don't think anything that the Fed speakers are saying is really going to change that. It's possible that we see a drop in Fed funds futures, maybe if inflation break evens rise, or we see an increase in growth, right? So if we're starting, like, PMIs were kind of expanding a bit. The next PMIs are going to be ISM. If we see strength in labor that bucks the trend of the last 2 months, or strength in inflation, we could see this number drop. Otherwise, it's probably just going to float around here until the next Fed meeting. At which point it will probably continue to float around here, because I highly doubt they're going to actually do anything. And so that's it. I thank you guys so much. I will see you bright and early tomorrow morning. Pickles Picks will be out tonight. Enjoy the rest of your day. Later, guys.